difference between depreciation and amortization. Very simple. In our business, we use two kinds of assets: tangible assets, intangible assets. Tangible assets are the ones that we can touch, we can feel, and we can see. Those are tangible assets. So, building, property, plant, and equipment, computer, furniture, train, aircraft, helicopter, yacht. Now, these are the examples of tangible assets. So, depending on different businesses will be using some of these and some of these assets in their business. Second category of the assets that we use in the business are referred as intangible assets. And what are intangible assets? Intangible assets are those assets which we cannot touch, we cannot see, and we cannot feel. Those are intangible assets. So the design, trademark,
Goodwill,
goodwill, yes, very good, goodwill,
patent rights.
patent rights, copyright. Now, these are the examples of intangible assets. Now, remember, it does not really matter whether you are using a tangible asset in your business or you are using intangible asset in your business. Since you are using these assets, value of these assets is reducing year after year with the passage of time on account of wear and tear. So, a reduction which is happening in the value of tangible asset is referred as depreciation, and reduction in the value of intangible asset that is happening is referred as amortization. So in other words, what depreciation is for tangible assets, amortization is for intangible assets, and that is the difference between the depreciation and amortization. Please remember, both of them are non-cash expense. And why both of them are non-cash expense? Both of them are non-cash expense because even though you take them in your books as an expense, but on account of depreciation you do not pay any money to anyone. On account of amortization you do not pay any money to anyone. So the expense is being taken in the books, but cash is not going out, and that is why they are known as non-cash expense. So what is a non-cash expense? An expense on account of which there is no outflow of cash. And since there is no outflow of cash, you add them while calculating your operating cash flow. So I hope that answers to your
Yes.
query. Yep. Very
Yes,
good.
yes. So
Very good.
basically, we use depreciation, amortization, such non-cash expenses just to find out the profitability of the organization.
Fantastic. Absolutely fantastic. Absolutely fantastic. So we charge depreciation, we charge amortization in the profit and loss so as to ensure that the cost that we incur on account of use of those assets is taken into account in our costing, is taken into account in our profitability. You have hit on the head of the nail, and that absolutely you are right.